I'm joined by Ross Gerber, President and CEO of Gerber Kawasaki. Ross, welcome. Many thanks for joining us. Let's start with this week's earnings report for Tesla. 74 cents a share expected. Would that make investors happy?
Well, I think if they make that number or beat it, it'll certainly at least mollify investors for the time being. But a lot is yet to be seen on what margins are going to be for the cars. And so, it's hard to see a situation where Tesla, vastly beats expectation because we already know how many cars they sold and we have a pretty good idea what the margins were. So it's really just, a worry of whether they disappoint. And that's sort of the concern of investors today.
Now, Ross, you watch Tesla very closely. You're an investor. So sum up for us, if you could, what's been good from Tesla over the last few quarters and what has been not so good?
Well, the brightest part of the business is actually energy storage, which is growing like crazy with good margins and a business that utilities, across the world can benefit greatly from. So we're very bullish on their side businesses, I guess you could say, like charging, where, North America has adopted the Tesla standard for charging, and the demand for charging is off the charts now by opening up the chargers to all the EV makers today. So Tesla can build chargers forever and make money off that. So that's also a great business for them. But really, for the main auto EV business, it's about Cybertruck and whether they can really launch and scale the product. And, if they can get to 100,000 cars over the next 12 months, that would be great. And we'd love to see them beat that number.
Now, obviously, the future of Tesla very much rests on the shoulders of Elon Musk. He is, of course, wants more voting control as a precondition for taking it down the AI and robotics road. Should investors back him in those demands, or has the saga of Twitter, now known as X, blotted his copybook?
Yeah, I think Elon's gotten a little bit too far over his skis now, asking for, 30, 40, 50 billion or more to increase his stake. He has an enormous equity incentive and complete control of the Tesla board. So I find this request to be quite odd, especially given the timing and the need to deliver full self-driving and Cybertruck and scale. Maybe if he succeeds in doing that, he could argue for a new compensation package. But his current compensation package is actually worth $50 billion. So you would think that would be enough for probably most people to be incentivized to work at a company.
And what about valuations for Tesla itself at 60 times earnings? It's pretty hefty, isn't it?
Yeah, and I think that's the biggest risk to Tesla investors on the short term is that, the valuation is twice that when you look at forward earnings for NVIDIA or Microsoft or Apple, for example. And I do look at Tesla as a peer of these high growth, big cap tech companies. And so why does Tesla deserve a 60 PE and NVIDIA a 30 when NVIDIA is one of the most exciting companies in the world today? So either NVIDIA is vastly undervalued or Tesla could be way overvalued. And I think the market's going to come to terms with these valuations over the next 12 months.
Now, we saw the S&P 500 at second record high in a row on Monday. What are the positives and the negatives of the outlook for markets from here? And how much of a threat would weak tech earnings be?
Well, I don't expect weak tech earnings, actually. So I think we're going to see a solid earnings report, not crazy good, but solid. And I think what we're seeing across the board is consumer is strong in the United States. We're seeing, high rates take its toll in certain sectors of the economy, but not really with the consumer because most homeowners today have low mortgage rates locked in. And they're really seeing a return of normalcy in the inflation rate. So people are out spending money and they're feeling confident about the future. So this is a good backdrop for stocks with the Fed lowering rates going into this year. It gives a lot of potential, how would I say, fuel for the market rally fire if things really start to slow down as we expect in the first quarter. So we expect the Fed to lower rates, and this will be a great backdrop for stock and bond investors this year.
Okay, Ross, we'll leave it there. Gerber Kawasaki's Ross Gerber. Many thanks for your thoughts today.